For over a century, the American people have lived under a monetary framework that should have never become a permanent fixture. In 1913, during a Congress in recess, the Federal Reserve Act quietly restructured how America manages money, installing a hybrid NGO system blending public purpose with foreign influence. The Fed reign is soon to end. Our United States Treasury is preparing to reclaim its constitutional authority over our nation's monetary system, formally decommissioning the Federal Reserve's conflicted influence and restoring constitutional control with accountable sovereign leaders. This is not wild speculation. It is the foreseeable resolution of a system that has long abused its purported function and too often prioritized the interest of financial insiders over the public good. The Fed was created in secrecy under a pretext of social good. Instead, its existence manipulated cycles of boom and bust, eras of endless war, runaway credit, asset bubbles, and chronic erosion of purchasing power. As this transition unfolds, the message to every American is simple and powerful. This process is designed to be lawful, deliberate, and transparent, built to restore public stewardship of money, protect savers and workers, and align our monetary policy with national priorities instead of global agendas. Our Treasury Department was established by Alexander Hamilton in 1789 with a clear constitutional mandate: manage the nation's finances, collect revenue, and preserve our dollar's integrity. For 124 years before 1913, Treasury-led monetary practices supported commerce, infrastructure, and expansion without any private central banking model. Today, that historical precedent is guiding our structured restoration. This transition is not sudden. It is being built through legislative, administrative, and technical steps in motion since 2017. Our Treasury's Office of Financial Research and Fiscal Service have expanded capabilities for macroeconomic analysis, payment systems, and securities management. New facilities and secure operations centers have been designed to support large-scale currency and debt administration. Treasury leaders are engaging with congressional committees, state regulators, and core market participants to map responsibilities and ensure legal continuity. Behind closed doors, no more oversight hearings, real DOGE audit provisions, and statutory frameworks being drafted to govern the handover. At the same time, our Treasury is establishing direct operational relationships with major banks, clearinghouses, and payment networks to replace abusive Fed functions. This groundwork demonstrates intentional planning, analysis, infrastructure, legislative backing, and cooperative engagement with the global financial sector to make restoration orderly and effective. The transition will follow a clear, phased process designed to maintain stability and confidence at every step. Phase 1. Regulatory integration. Treasury will absorb the Federal Reserve's regulatory roles for banks and systemically important financial institutions, consolidate rulemaking, compliance, supervision, and enforcement under a single accountable public authority. This preserves oversight while removing hidden conflicts where private ownership distorted public policy. Phase 2. Policy authority transfer. Interest rate policy, open market operations, and money supply decisions will be reconstituted inside Treasury frameworks, overseen by officials answerable to our President and our Congress only. Decision procedures will be codified regular public reports, scheduled testimony, and predetermined emergency protocols to ensure clarity and prevent unilateral actions. Phase 3. Asset and operations handoff. The Fed's balance sheet, trillions in Treasury securities and other holdings will be transferred into Treasury management through transparent accounting and statutory mechanisms that avoid market disruption. Regional reserve banks will be repurposed as Treasury regional offices, retaining local infrastructure for payments, liquidity provisions, and community-level coordination while ending private Fed structures. Phase 4. Personnel and knowledge retention. Current Federal Reserve staff with essential expertise will be offered roles within Treasury, accompanied by transition teams to carry forward institutional memory and operational know-how. Throughout each phase, backstop mechanisms will protect liquidity, including coordinated short-term credit facilities, temporary federal guarantees, and staged asset transfers to prevent abrupt market shocks. Importantly, communication will be continuous. Public briefings, congressional oversight, and international coordination where appropriate, ensuring both domestic markets and global partners understand the timeline and safeguards. This approach minimizes risk, secures the payment system, and preserves credit access while returning control to accountable public institutions. This restoration delivers tangible benefits for everyday Americans and the broader global economy. Transparency will replace the opacity that once surrounded critical monetary decisions. Every major policy action will be publicly documented, debated in open forums, and subjected to statutory oversight. Accountability means policymakers set rates and manage money supply in pursuit of jobs, price stability, and sustainable growth, not to maximize central bank profits. Practically, that translates into interest rate decisions weighed by labor market conditions, real-time data, and investment needs for infrastructure and industry. Currency policy will prioritize purchasing power and competitiveness for American workers and businesses, promoting fair credit access for small enterprises and communities historically underserved by legacy finance. Internationally, many successful democracies operate with clear public control over monetary frameworks, combined with independent technical advice, a model blending public accountability with expert implementation. Regulatory consolidation will reduce conflicts of interest and promote consistent enforcement across regions. For Main Street, the result is steadier borrowing costs, clearer expectations for savers and retirees, and monetary policy designed to support broad-based prosperity. To address fear of disruption, the transition plan includes explicit legal safeguards, liquidity backstops, and phased implementation timelines, all communicated openly so markets, employers, and households can plan and adapt without panic. We the people deserve a monetary system that serves our interests, not private banking profits. This transition is about restoring constitutional stewardship of money and correcting a century-old structural error that diverted public monetary authority into hybrid, privately influenced NGO control. The Federal Reserve's role is being methodically dismantled and returned into direct Treasury stewardship governed by statute, supervised by elected representatives, and implemented with technical expertise. Stay informed. Follow congressional hearings, review Treasury briefings, and engage with local representatives to ensure accountability in every step. We stay engaged, voice our priorities for jobs, price stability, fair credit, and transparent economic governance. This is our country's financial future being reclaimed, returned where it began, nurtured under public oversight, and entrusted to policies that prioritize our needs. This change is coming, planned and deliberate. Take part in making sure it protects prosperity, liberty, and the economic security of every American.